Today, we're breaking down whether VA home loans are actually good for first-time home buyers. If you're active duty or a veteran thinking about buying your first home, this episode's for you. We're a veteran-owned lender with over 24 years of experience helping Florida veterans buy homes right away. And today, we're going to walk you through who qualifies, how VA loans really work, and what they actually cost, so you can make a smart, confident decision from day one. Let's get into it. I'm here today with Joe Harris, Chief Operating Officer.
Hey, Lindsay, how you doing?
Good. How are you doing, Joe?
Super.
So we're gonna talk about how VA loans affect specifically first-time home buyers. How does that sound?
Sounds great. It's a great loan.
So what credit score do first-time home buyers that are VA loans typically have to have?
You know, I'm happy you went right to credit, because a lot of people think, oh, my credit's not that great, I probably can't get a loan. The VA loan is a little more lenient to veteran borrowers with credit. And technically, the VA loans don't have a minimum credit score, but most lenders put minimum credit scores on there of maybe it's 640, 620, or even as low as 580. Some might be lower, but I don't see many below 580. So somewhere between that 580 and 640 is where I see it. Usually more towards 620, 580.
Gotcha. So don't be scared about your credit score if you're a first-time home buyer looking to get a VA loan.
Right. Absolutely. Don't be scared about your credit score. At the very least, if you don't qualify now, a really good mortgage loan originator will help you and tell you, hey, these are the things you can do to improve your credit. And if you do these, it looks good, or you know what you need to do to get that credit up.
Gotcha. Can veterans use a basic housing allowance to qualify for a VA home loan?
In most instances, they can use the BAH or the BAS, the sustenance and the housing allowances, to help qualify for them for a home, because they're given that money in order to help pay for their housing. So it makes sense.
Yeah. What about disability income?
Disability income. If we can verify that through the VA and it's going to go on, yes, we can use disability income in most cases.
So if I were a first-time home buyer that's wanting to use my VA loan, what things should I start gathering to get ready to qualify for this process?
So typically it's pretty easy for us. One of the things is you have to be eligible and you have to qualify. And eligibility has to do with your certificate of eligibility. And that's something very easy that we can get for you. If you call us with basic information, we can get that for you. So that's one thing you would need as a COE. You know, typically if 30 days of pay stubs, if you're W-2'd, we typically like to see W-2s. Any money that you need for, if you choose to put a down payment, you don't typically have to on a VA loan, but if you choose to put a down payment, we're going to see where that money's coming from. We'd probably look at 2 months of asset statements, checking, savings, if you have a TSP or a 401k, things like that.
Gotcha.
And if you are self-employed, we're going to look at tax returns, 1099s, things like that as well, business and personal.
Sure. Now, from a product standpoint, what are some of the biggest financial benefits for a first-time home buyer getting a VA loan?
Well, the obvious is one of the biggest barriers to entry is that down payment. Mm-hmm. And so with a VA loan, as long as you qualify for the loan, you can have zero money down as a down payment. So it takes away that down payment requirement. You can even, one of the other big challenges is closing costs, because those are a real cost. And while you can't roll closing costs into the loan, you can negotiate with the seller up front to pay all or a portion of your closing costs, because the VA will allow you to pay all normal and customary closing costs and some other things as well that we don't need to go too deep into right now. One of the other advantages, typically, not always, but typically the VA loans have a little bit lower interest rate. So more affordability in your payment, mm-hmm. which is big. There's a couple other things like more leniency on things like bankruptcies and foreclosures. But if you're a first-time home buyer, you probably won't have a foreclosure because you wouldn't have owned a house and things like that.
So for the people that are just starting out and they're wondering if this is a good product for them, what are the differences between that loan product versus conventional or any other loan product that might be out there?
One of the biggest differences I see is that the no down payment. Even FHA is 3.5% down. Conventional, you can go as little as 3% down, like on Fannie Mae or a Freddie Mac loan. And so with VA, it allows 0% down, which is a clear benefit right off the bat. And there's no monthly mortgage insurance. I didn't mention that earlier, but there's no monthly mortgage insurance. There is what's called a funding fee that can be rolled into the loan and is paid up front. And your first time usage of the VA loan has a lower funding fee than subsequent usage. But if you're deemed more than 10% or more disabled by the VA, that that funding fee you're typically exempt from.
Gotcha.
So did I answer the question there?
Yes,
Okay.
you did.
Yeah, but go ahead.
And kind of tagging on to that, there are some misconceptions out there that keep people from using the VA loan product. What are some
Okay.
misconceptions that you can think of off the top of your head?
Some people say it's harder to get a VA loan. I don't know where that's coming from because, again, it's more credit lenient on the borrower. It's a full documentation loan, which means we're going to collect your income, your assets, and review your credit and things like that. But most loans these days are. There's some other misconceptions that it's harder to qualify, like the property is harder to qualify. But the reality is that the appraiser is going to be looking to make sure it's safe, sound, and sanitary. And they're also going to be making sure the value's there to protect you from overpaying from a house and a lender from overlending. But at the end of the day, it's going to be very close to what a conventional or conforming appraisal looks like anyway. And if not, those are things that you might want to think twice about getting yourself involved in certain situations that the VA appraisal might call out. So the misconceptions, other than that, I mean, I don't know. Did you have some in mind or?
No, not in particular. I just know that there was a period of time where people thought it was, like you said, harder to get a VA loan. Or some agents were steering clear of accepting VA loans for a brief period of time.
Well, a lot of that had to do with the times. And there is a clause, it's called an escape clause the VA has that says if the house doesn't appraise, that the veteran borrower can choose to back out of that contract without penalty. And so maybe during the times of COVID when everyone was, bidding up the values of the house, where the point where they were saying, I don't know if this is going to appraise, are they willing to bring more money? And because of that escape clause, it kind of scared them because that supersedes every other clause. You can't put something on top of that supersedes the VA escape clause. So that out made sellers a little nervous to stick with that contract, versus another one, which is very unfortunate.
Yeah.
Very unfortunate.
All right, let's skip over to the fortunate side of things.
All right, cool.
Long-term wealth building. So how does using a VA loan affect long-term wealth building and equity?
Well, you're building equity with every payment you make on a VA loan. Lower interest rates, you're building more, you're paying less in interest and you're paying more towards equity of the home. But, there's a couple ways that people use VA loans. Obviously, it's intended for the veteran to be able to buy their home. Now, if they get PCS'd or a permanent change of station to some other base and they have to move, they can actually keep that home. And because of what's called bonus entitlement, they can buy another house with a VA loan. And depending on the max loan amount, it's going to depend on how much entitlement you've already used. There's a very, I want to say complicated, but for most people it might be a complicated calculation, but that's something we can help you with. But one of that, going back to misconceptions, is that you can only have one VA loan at a time. And that's simply not true. Mm-hmm. So if you have a change of station or a life event or something that says, I need a new house, maybe in another area, or another purpose, you need a bigger house, you have more kids, you don't necessarily have to sell the other house. And so you can rent it out. You're allowed to rent it out, and then you can build wealth and equity through that. Now, it's not meant to create, mini property, moguls, but it is intended for that purpose. If you have to move, that there's that opportunity.
That's awesome. And you mentioned a little bit about the rates. How do the rates compare to other loans, like conventional loans?
I don't want to give it an exact amount, but I would say the VA loan rates are definitely lower most of the time. Not all the time. They go up and down sometimes, but typically it's a little bit lower than a conventional loan, and even an FHA loan sometimes.
And what should VA buyers know about closing costs?
Another big misconception is that you can just roll your closing costs into the loan. And this isn't entirely true. You can't just say that the house is $200,000, closing costs are $8,000, so I want a loan for $208,000. You can't necessarily do that. But what you can do is negotiate with the seller to pay your closing costs. And you might say, I'm going to buy the house for $208,000, and I want the seller to pay $8,000 towards my closing costs, prepaids, and escrows. And the seller can pay all normal and customary closing costs and about what they say 4% of sales concessions, which might be some prepaids or other sales concessions, like if you need to pay down credit card debt in order to qualify.
Awesome. What's the VA funding fee? This is something that's always been a mystery to me.
Okay. The VA funding fee they call it a funding fee, and it's a different amount depending on if it's your first time use or subsequent use, or if it's a different type of loan like a VA, what's called an interest rate reduction refinance loan, or an EARL as we so call it. So there's different types of funding fees, and the funding fee is different if you put more money down too. Mm-hmm. So without going through that matrix of how much these things all are, The funding fee is the cost to fund the loan, and it goes directly to the VA. We actually send the VA a check after we fund the loan, and it basically insures and guarantees all the VA loans to the lenders. It's a one-time fee. It's paid at closing typically financed into the loan, although it can be paid cash at closing if the veteran wants to do that. I don't think I've only had that done one time or two times in the hundreds upon hundreds of VA loans we've done, if not thousands. So that's very rare that they do that. So it's the cost to guarantee the loan with the VA, and the VA guarantees basically the lender that if there's a default, that the VA is going to take care of it.
That's pretty awesome if you think about it.
It is. Yeah, it's people say there's no mortgage insurance, and there is no mortgage insurance on VA loans.
So last question for you. You ready? This one's a doozy.
I think I'm ready.
Why is working with a local VA experienced lender so important for beginners?
There's so much to know on VA loans, and there's a lot of caveats that, some of the big box lenders or out of area lenders, they may or may not know, right? They may or may not know that, and they might, I don't want to say they'll steer you wrong, but if you're not an expert in VA loans and you don't do it all the time, there are some nuances that might prove difficult for someone. And not to mention, like, the Patrick Space Force Base is right here, right? We work with them all the time. And I always like to tell veterans, and whether it's local here or in the state of Florida, there are different rules in different areas and things that might affect the loan differently. So I always say find a local, if you're in Missouri, find someone close to you or at least in your state that can help you on your loan. If you're in Florida, obviously give us a call or reach down below somewhere to talk to us about it. But I think it's absolutely important to work with an experienced local lender. We're veteran owned, veteran operated, and veteran focused, right? Mm-hmm. And so, we work with veterans locally. We work, whether they've moved on and work at a different company, we know how to verify their employment, whether they're at L3 Harris, Northrop Grumman. I don't know if I'm allowed to say these names on here, but a lot of local companies that do a great job, and we work with them all the time.
I couldn't have said it better myself.
Right. Thanks.
So if you know anyone that is a local veteran or just have some questions for us, drop us a message below and we'd love to help you out. Thanks so much for joining us.